Regarding the US has been one of the core markets in value creation for the last 5 years, top 3 for Santander shareholders in euros. And they have done a great job growing profits by 30% over the last 3 years. And why Webster and why now? Webster is a great bank, one of the best by profitability and efficiency. We're the best buyer. We're in the same footprint. They have 80% commercial business. We have mostly consumer. Together, we're going to take the Santander US, now with the corporate bank, also to 18% return on tangible equity. That is best-in-class profitability by 2028 among the top banks in the United States. Again, US has always been a core market. This is a bolt-on, but strategically important acquisition because it drives us to our ultimate goal, which is to be one of the most profitable banks in each geography.
OK. Does the volatile policymaking environment in the States, Anna, at this point, did that give you pause for thought at all? Or is this just absolutely the right deal at the right time?
It's the right deal at the right time. Volatility is the name of the game in all our markets. US is the biggest, most, I'd say attractive on a risk-return basis market in the world. It has huge connectivity for all our franchises in LATAM and Europe, not like Poland. That's why we sold Poland. We invested in the UK and in the US. Small acquisitions. Webster represents 4% of Santander loans and will greatly add to our ultimate goal, which is 20%, above 20% ROTE by 28, one of the most profitable banks in the world at that point.
You've told us a lot of the positives in the numbers and beating estimates at the net line seems to be one of them, the buyback, all of that, the market working its way through. The shares are down, though, 4% today. Do you think the market maybe needs a little more convincing about the Webster deal? Is there something in loan loss provisions that seem to be a little higher than expected that we need to know about?
As I said, Webster makes us at scale in the United States. So as we think about Santander, this is totally consistent with our capital hierarchy. We're investing in a bank that delivers 15% return on invested capital compared to share buybacks at 9%. We have, however, announced a 5 billion share buyback today. We'll be buying 5 billion over the next few months, which is keeping all the commitments we made to shareholders in terms of returns and being able to invest capital at 15% return on invested capital. That's huge. Santander is about growth. We got to our capital levels, we greatly increased distributions, and what you should expect is increasing distributions as we grow earnings. And Webster will add 7 to 8% earnings per share over the next few years. That's huge.